Good evening, everybody. I wanted to go ahead and take tonight to go over all of the indicators that I currently offer on WAP and all of the settings that I use just so you guys have an idea of what to use. We're not going to go over this one because I didn't make that one. If you guys want to use it, that's what it's called. It's free. Go for it. But we're going to start off with the silver bullet. It is probably the most complicated in terms of setting up, and it's a lot easier than people think. And I'm going to go ahead and go through my settings. So what this looks like primarily is you start off with your liquidity levels. You get to decide if you want to show previous day highs and lows, previous week highs and lows, Asia session highs and lows, and London session highs and lows. And you get to define the hours of Asia session and London session. And then beyond that, once we get past that, you get to color code everything. I color code Asia highs and lows is the same and London highs and lows is the same just because it works visually for me. This entire chart is just how I like to look at it. Previous day highs and lows and previous week highs and lows, I like all the same. Pre-market highs and lows, I don't use. But if you turn them on and you say, okay, pre-market is from 7 to 9:30, let's say, you could make pre-market highs and pre-market lows look like that. It's pretty straightforward. And then your pre-market highs right there and your pre-market lows right there. Pretty straightforward. I don't typically use those just because of how I use Silver Bullet. Beyond that, we then go to opening gaps. I turn all of these on. Basically, what NWOG current means is this week's new week opening gap. NWOG old means the last week's new week opening gap. And it's just so you can have two on at the same time. And then you can define what colors you want each to be. You can change them however you want. That goes for the NDOG as well. It's today's and then the prior days. Then we have our London kill zone, which is from 3 to 4, our New York AM kill zone 10 to 11, our New York PM kill zone 1400 to 1500. Kill zone gap, this is just an ATR multiplier. So basically what this means is based off of the volatility of the session, it will make these thick lines that define the kill zone a certain distance away from the bars. So if you look over here, there's a very small distance away from the bars. Over here, it's a very large distance away from these bars, at least much larger than over here. That's just ATR. It has to do with the volatility of the range. And then that's just how far away from price the bars will be. And then this is the width of those bars. So if you turn those down, then the width of these bars back here slims down. I like it at 2 just because it differentiates it. And then you can choose the colors. So like if I wanted to make this PM kill zone like hot pink, you can make it hot pink, if that's what floats your boat. Beyond that, we now have liquidity sweeps and market structure shift. We're almost to the end, guys. Pretty straightforward. We're almost there. You can choose to show change of character and show market structure shift, or one or the other. The definitions of them are here and here. You just hover over them and it'll tell you how it defines a market structure shift and how it defines a change of character. Now, you then get to determine where the change of character and market structure shift time frame comes from. You can either manually set it as I want my market structure shifts and change of characters on the 5 minute or the 1 hour or the 2 minute, or you can just set it to the chart. So whatever your chart is set to, that's what the market structure shift and change of characters will be set on. I like mine on the 1 minute. That's my personal decision. Now, an important thing to keep in mind is this pivot look back. How a change of character or market structure shift works is right here, for example, we have a market structure shift. That pivot look back is just talking about how it defines a swing high or low. And that's what we come to the conclusion of right here. If I were to say, okay, well, the pivot look back has to be 2 bars, that means on both the left and right side of this swing high, both of these candles must be below this high. That's what a pivot look back of 2 means. So if we go ahead and we change this to 2 instead of 1, this market structure shift changed from right here to right here. Now, if we change it to 3, it will no longer be right here. There will no longer be a market structure shift right here. Watch. Right here. See? Wait, now there's no market structure shift. So I hope that makes sense. It's just how sensitive you want the swing high definition to be. So I like my swing high definitions to be very lenient. I just want 1 bar on either side that's lower than the middle high. So this one has to be lower and this one has to be lower in order for it to be called a swing high. That's my personal preference, but that's why it's toggleable. You can set it however you want. It's not really up to me. And then you can go ahead and set and if you turn on change of character, there's a ton of these. Wait for it to load. Yeah, so they show up all over the place. And if you have a market structure shift and a change of character in the same location, it just changes the label to say market structure shift plus change of character. And it labels them slightly different, so it makes these dotted lines instead of full lines like the market structure shift. That's just how you can differentiate between them. Then beyond that, you can change the colors of them. So like I have all my market structure shifts and change of characters for bullish and bearish the same color. So bullish are all dark green and bearish are all dark red. Now we're almost at the very end for a silver bullet. You can label the silver bullet start as 940 or 10, whatever you prefer. It's really up to you. Beyond that, we have fair value gaps. Now, I just want to throw this out there. My version of a fair value gap, which I have a free indicator on in WAP for, is that it must have a swing high behind it. This version of fair value gaps has nothing to do with that. It literally just shows the fair value gap. And you can define what time frame you want it to be pulling from, whether it's the time frame your chart is on or you want to manually set it. You can show bullish fair value gaps, bearish fair value gaps, and then you can extend it until filled. And then you can define how many of each type of fair value gaps you want it to show, and then you can change the color. So I currently have it on the 1 hour. So when I expand out to the 1 hour, we will be right over here. And you will see all these fair value gaps. We have this bullish fair value gap down here that hasn't been filled yet, whereas we have all of these fair value gaps in here that have been filled. And if you want it, and we'll go over it later, but I have my this ICT validated fair value gap that I use a lot. I really like it, and it's slightly different than this. It just defines fair value gaps differently. So if you want to use the two in together, all you do is you just go down here, you turn off all these fair value gaps, and then you edit this one to do whatever you want it to do. That's silver bullet. Let's go ahead and move on to the next one. First presented fair value gap is pretty straightforward. Most of these are going to be pretty straightforward. So your minimum fair value gap size is defined in ticks, as it says right here. What that basically says is I don't want a first presented fair value gap it's because it shows the last 5 days worth of first presented fair value gaps. I don't want it to show me a first presented fair value gap of less than 3 ticks. It's just ridiculous. Like if it's going to be 3 ticks, then that doesn't count. I want one of like substantiable size. That's the main thing that I care about. Beyond that, you can get rid of the midline or not, and you can extend the boxes until mitigated, as so. Otherwise, they just extend. And then you can have the labels taken off. The labels just show the days. So if you don't want the days in there, that's one thing. If you do, that's another. But, and then you can extend the fair value gap to include adjacent, volume imbalance, or liquidity void. Let me go ahead and find an example for you guys so this doesn't get like confusing, so I can just explain this to you for a moment. Let's see if this one has one. That one does not have one. This big one probably has one. Let's see. Oh, it does. Okay, so here, look right here. So with this fair value gap, technically we have a fair value gap from right here to right here. But one thing you'll notice on the top is there's actually a volume imbalance. So it actually includes this little gap. Now, it does that on the other side as well. So because there's a volume balance on this side all the way down here, this is also counted as part of the fair value gap. You can get rid of that, obviously, and just say, hey, I don't want you to include those, and automatically it just gets rid of them, and it just counts from here to here. Totally up to you. Personal preference on how you determine a first presented fair value gap. Totally up to you. Now, let's go ahead and move on to beyond first presented fair value gap to high time frame market structure. This one is really straightforward. You can't really do anything to customize it. It just is how it is. It's a table, and the settings is pretty much you can turn the table on and off. That's about it. Should be pretty straightforward. Moving on to liquidity levels. So this basically just marks, let me go ahead and show you this. So the liquidity time frame. So I have the liquidity time frame set at 1 hour. So basically this info will tell you more about it, but it just says, okay, I only want liquidity levels from the 1 hour. So I want 1 hour buy side liquidities and 1 hour sell side liquidities. I could also say I want buy side and sell side from the 15-minute. And that works. You just get a whole lot more. That's as simple as it is. There's nothing else to it. It's pretty straightforward. But I use the 1 hour just because that's simple for me. So This, now we go back to the swing pivot bars on each side. So this defines how we determine what a swing high is. And in this little info section, it should say it. So numbers of bars left and right on the chosen time frame that must be lower or higher to confirm a pivot. So if we look on the 1 hour, all of these highs that it's chosen, for 5 bars to the left and right, there is not a bar that goes above this high. So this high right here, 1, 2, 3, 4, 5. There's not a single high that goes above it. 1, 2, 3, 4, 5. There's not a single high that goes above this buy side liquidity. Therefore, it is valid. Otherwise, this would be valid. So if we go ahead and say, you know what, I only want it to be 1, then now you get stuff like this, where this is a swing high. That is technically a swing high. Both the candle to the left and to the right are both lower than this high. Therefore, it is buy side liquidity. So you can set it up and customize it to be more sensitive or less sensitive depending on how you like your how sensitive you like your levels to be. The last thing is you can show levels from the last n amount of days. So right now you can see that my levels stop printing right here on this candle. One thing that we can do is we can say, hey, I want to see it from the last like 10 days. I want to see a bunch of levels of liquidity. It's automatically going to show us all of these levels of liquidity from from a while ago, but it still has all of these labels. So the labels are there no matter what. Technically, you can turn the labels off if you just go over here and you say, I don't want the pane labels. Now all the pane labels are gone. You just have lines. You can do that with pretty much any one of the indicators. If you just go to style, so visibility, don't mess with that. But inputs is what we've been going over. Style is just on the right. And you have inputs on the status line, which just means you have these little numbers up here in this bar, which means, you can just see what they say. So like you can do the same thing for silver bullet, where I can say, I don't want inputs in the status line. And it's just that simple. It's not rocket science or anything. But like style, you can turn off the pane labels or the lines or the boxes. And for liquidity levels here, you can turn off the pane labels, which each one of those letters are on a pane. It's called a pane. And then the letters are just the label itself. So you can turn those off, or you can turn the lines off, and then you have nothing. So do as you wish with that. It's totally up to you. Next, we have open levels. And this one's pretty straightforward. It shows the midnight and 8:30 open, and you can customize the color. So I like to make the color bright pink personally. It's my choice, my color of choice, just because everything else is black and gray and monotone. So I like a little pop here and there. But it's pretty straightforward. You can adjust the line width to be 4 if you'd like. It gets real thick, but I do have a cap at 4 because it gets a little outrageous, a little too much. If you go beyond that, if you don't want the labels, you just press pane labels, and now you just have the lines. But it is kind of nice to have them there because you get to see if it's midnight or 8:30, and then the month and the day. So pretty straightforward. And you can turn off those inputs and status line as always. Inputs and status line is much more of a thing for like this indicator that I use. I can get rid of the inputs and status line, and it just becomes the name, which is pretty straightforward. That's it for the open levels. Now we're going to go to PO3. PO3, not a whole lot you can do with this in terms of customizing it. It's a lot of it's just the color. So like the open midnight color, I want it to be bright pink. The bullish color we can make dark green, and the bearish color we can make dark red. Pretty straightforward. I don't really have a whole lot else besides that. But I like using my PO3 indicator. It's very nice. It doesn't always work, but it's very nice in terms of like this, where we have like return to this, and then it was right, and then return to this, and it was right. And here, it was a Friday, so what? And Tuesday it didn't work, which was unfortunate. But I like it. There's not a whole lot to customize there. Quarterly theory true opens. This one is just a lot of colors for the most part, color and line width. So there's show true year open, true month open, true week open, and then I'm going to go ahead and turn these lower ones off just for the sake of simplicity. So we have our true month opens right here. We have our true week opens. The true year open, in order to get it, you have to be on a high enough time frame to scroll back to where it was. Otherwise, if we're like on the 1 minute here, and I try to say, okay, I want to see the true year open, it's not going to be able to pull that data because it's so long ago. It doesn't recall that data. And if you have a lower plan, like a super high trading view plan, it can't pull data from that far away. So do keep that in mind when you have these. If you're trying to look at the true year open, I would suspect you're doing it on a higher time frame, or you can just manually label it once you go to a higher time frame. You can just use this to show it to you, and then kind of use that as your. Anyways, I feel like you probably get the idea. Other than that, you can change the color of the lines to whatever you want, and the width of the lines to a max of 4 as usual. Because I think beyond 4 is rather obnoxious. I mean, come on, it's pretty thick. You're like covering entire bars in some cases. I think 2 is nice. 2 and 1, because it kind of differentiates like my high time frame levels. I like to have is like a width 2, like the week open, sometimes the daily open, and then the monthly open, and then the rest of them I like to be width 1. And as always, you can turn off the inputs and status line, the pane labels, and you can just have the lines. You could just have the pane labels. It's really up to you. And then we have our ICT regular trading hours opening range gap. So those are really tight opening range gap right here. So let's not look at that one. This one's probably easier to envision. So looking at this, it's pretty straightforward. Not a whole lot to do here. It's a lot of buttons, but it'll make sense in a moment. So showing the previous close lines is, if we just do this, oopsies, that gets rid of the menu. You show the previous close, you get rid of that. So you see that little line that's disappearing? That was the previous close. So you can get rid of that. If you don't think that that's a valuable level, then you can get rid of it. Then you can show the current open levels. So that bottom line over there is going to disappear. Yeah, that bottom line right there. That's the open level of the current day. So you can decide whether or not that's relevant. Totally up to you. And then you can show the CE lines. So that's going to be that middle line right there. And then you can show the quarter lines, which are those lines. So it's pretty straightforward. I mean, if you just press these buttons back and forth, you'll figure out what you like. I like having that C. I think C is really important, and knowing the full range is important. So I think those 3 lines are really good. Other than that, you can also show the labels or not show the labels, totally up to you. I like having them just because it tells you the day that they're from, but totally up to you. And you can define the line width, once again, up to 4. Now, these ones are all copies of the exact same thing. And how this works is it'll show you 5 days worth of the regular trading hours opening range gap, with the exception that it will only extend day 1. Now, let's say I had a unfilled range like from Thursday, and I wanted to extend that. This is day 1, day 2, day 3, day 4, and so on. So this one would be day 5. If I want to get Thursday to extend onwards, this is day 1, this is day 2. You just find out that this is day 2, and then you say, okay, extend day 2 lines, because I think this range will be relevant to whatever trading day it is. You can just extend those, and now they've been extended. And this is where the labels become really helpful, is you can say, oh, these are the extended labels from June 11th, or whatever it may be. Those become very helpful. On to the next one, we have our ICT validated fair value gap. So this one is entirely dependent on you. And if you guys on any of these indicators feel that you have suggestions, let me know. But this is how this works. We have this button right here, and this is like kind of what validates my entire opinion about fair value gaps. We have to have a swing high inside of the fair value gap range within this many bars. That's basically what these two things mean. So what that means is when we go down and we look at like this fair value gap right here that hasn't been fully filled yet, with that little toggleable button that I had, this one right here, require swing high inside fair value gap, swing high look back 10 bars. What this means is that there must be a swing high within the range, so from the top to the bottom of this fair value gap within the last 10 bars. So if I count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, within all those bars, there must be a swing high, and there is. That's that swing high right there, and it's within the fair value gap, therefore it's validated, and price ends up respecting it. That's why I use these fair value gaps. I think they're very, very important, and whatever time frame you're on, it'll just apply it to that. Swing high, pivot bars on each side. So this is how you define a swing high. So going back to this fair value gap right here, had I said, okay, well, I only want fair value gaps that have a swing high behind them, that have 2 bars on either side that make it a swing high, this automatically disappears because there's only 1 bar on either side of this swing high right here that makes it a swing high. So that's kind of the same in a lot of other of my indicators, but kind of want to throw that out there. Other than that, I like setting this to 5,000 because I can, and it allows me to see where these fair value gaps actually become relevant. So see, this fair value gap became relevant all the way over here, but if you only extended it, that's just what this means, unfilled box extension. If you only extend it 500 bars, you wouldn't see that it's reacting off of a still unfilled fair value gap. So that's why I extend them. You can extend them as far as you want. If you want to extend them 5 bars, go for it. Next, we have the show inverse fair value gap tag. This just pretty much says you can show when a fair value gap has been inversed, which is totally up to you. Stop box when filled. So when a box has been filled, so like if we have this on and we say this fair value gap right here, it is validated because it has that swing high behind it with 1 bar on either side that are lower than this high. Therefore, price will react off of it. And it did. It went on and it hit this fair value gap and then it extended to the upside. That's awesome. That's great. That's what we want to see. However, what's important is then it got filled. If you don't want old fair value gaps sitting on your screen, then you just say take off stop box when filled, and whenever the fair value gap gets filled, it gets taken away and then it gets deleted, and only the unfilled fair value gaps get left behind. So like this hasn't, like this fair value gap, these 3 down here haven't been filled from top to bottom yet, therefore they haven't gone away. Totally up to your preference, whatever you feel fit. These are just the colors. This is the border. So like my border is a little bit, has less transparency than the center of the box. That's just preference. You can set them up however you like. And if you want to show labels, you can. And this is just the position of the labeling. So I don't want to have labels because I know what all of these things are. It's just kind of stupid for me to have the labels on there if I know what all of these things are showing. So that's totally up to you, totally personalized. Okay, we'll go ahead and go on to the last one real quick. That is our ICT QT time levels. There is one thing you can do to customize, and it is the color of each of these bars. You cannot do anything else. There's the microstructure quarters, the session quarters, and then the daily quarters. That is what I find relevant. That is what this indicator shows. And you can define how tall it is, and you can define the color of these individual bars. I do suggest you turn this on. Otherwise, when you don't do that and you apply this indicator, it will apply it to the same price as where we're at up here, which is 26,000. And this only goes from $0 to $3. So it makes it kind of stupid. So if you just press this, it auto fits data to screen. See, so it auto fits the data to screen. Same thing if you do it here, it auto fits this data to my screen, but I don't like doing that because I like being able to look at my chart. So yeah, that's relevant. You guys can mess with that however you like. That's kind of it for me today. I may come out with some more indicators in the near future, in which case I will come out with a new one of these. But for now, this is your all comprehensive guide to how to set up these indicators and how to customize them. Hope you all enjoyed, and I will see you on the next one.